Hello and welcome everybody to today's edition of Mexico News Network's Breaking News Business. I'm your host, Elliot Bullman. Remember to follow us on all our social networks and to catch us every day by logging onto our website, mexiconewsnetwork.com, for relevant stories and news. Let's start with today's information. The appreciation of the peso against the dollar after the results of Sunday's election day in the state of Mexico is a clear and forceful reaction of the markets, said Jose Antonio Meade, Secretary of Finance and Public Credit. On Monday, the Mexican peso was at its best level in 9 months, closing at 18.3445 pesos per dollar, up 1.8% compared to 18.69% of Friday's reference price. Regarding the possible judicialization of the electoral results, the head of the Treasury pointed out that the electoral process is quite solid. We're a country that has been seeking to have a strong, clear federal authorities and jurisdictional processes that give certainty. So I'm certain that a process of review of the election will be given in a fairly robust regulatory framework, he assured. Meade hopes that by the end of the current administration, overall, the generalized prices in inflation will be around 3%, considering that the expectations of inflation are well anchored. Inflation has maintained an upward trend since 2016 and in most recent measurement stood at levels of 6.17%, more than double the 3% set by the Bank of Mexico. In other news, the United States and Mexico reached an agreement on Tuesday in a long-standing dispute that will allow duty-free sugar imports to resume from south of the border, albeit with new conditions. U.S. Commerce Secretary Wilbur Ross said the new deal will address the flaws in the current system and protect American sugar refiners, confectioners, and soft drink makers from harm caused by imports of subsidized Mexican sugar. The deal will increase the import price to 23 cents a pound of raw sugar from 22.25 cents, and for refined sugar to 28 cents a pound from 26 cents. In addition, the share of refined sugar imported will be reduced to 30% from 53%. Guajardo said those changes protect Mexican companies and workers and maintains Mexico's position as the main supplier to the U.S. market. In addition, Mexico was granted right of first refusal to supply any excess U.S. demand, as determined each year by the U.S. Department of Agriculture. U.S. sugar producers have protested the amount of cheap sugar pouring in across the border, accusing Mexico of subsidizing its sugar industry, then dumping the excess product. Washington had threatened to slap tariffs of up to 80% on Mexican sugar unless a deal was reached. In other headlines, Mexico chalked up an unexpected $617 million trade surplus in April as higher oil and factory exports combined with a drop in imports of non-petroleum goods. Exports last month rose 3.6% to $31.48 billion from the same period a year earlier, while imports fell 5% to $30.87 billion, according to figures released by the National Statistics Institute. The surplus brought the trade balance for the first 4 months of the year to a deficit of $2.16 billion. Petroleum exports rose 26.9% in April to $1.68 billion, thanks largely to higher crude oil prices. Crude exports by volume were little changed from March and from a year earlier at 1.02 million barrels a day. Exports of manufactured goods increased a modest 1.9% from a year ago, with growth likely affected by the Easter holiday week that fell in April this year compared with March of 2016. Vehicles and auto parts shipments abroad also rose 1.5%, and other factory exports were 2.1% higher. The economy was also boosted by the volume of family remittances that entered the country in April, which grew 6.2% annually and totaled $2.306 billion, a historic flow for a similar period. According to the records of the Bank of Mexico, cash transfers to the country had not recorded such a high amount for a fourth month since 1995. In local currency, these shipments totaled 43.3 billion pesos, implying an annual increase of 14%. The accumulated amount between January and April was $8,946 million, also an unprecedented figure. And finally, let's check the markets. The Mexican peso decreased 0.21% to 18.18 from 18.22 in the previous trading session. IPC Mexico increased 2 points to 49,277 from 49,275 in the previous trading session. This was all for today. Thank you for staying with us. I'm your host, Elliot Bullman. Remember to follow us on Facebook, Twitter, and Google+, and log on to MexicoNewsNetwork.com for more information on Mexico and the world. Until next time.